You know, it's funny. Most of us have the Uber app on our phones. You tap a button, a car shows up. You tap another, food arrives. Simple, right? But behind that super simple interface is, well, it's an absolutely massive, complex global machine. One that's fundamentally changed how we move, how we eat, and how our cities even work. So today, we're going to pop the hood. We'll look at the engine that really drives this business, see how it's evolved, and figure out what truly gives it its competitive edge. All right, before we really dive in, I have to give you the standard disclaimer. Everything we're about to discuss is purely for educational purposes. It is not an investment recommendation. And any of the numbers or expectations you see, well, they're just to help illustrate a point. They are certainly not a guarantee of future results. Okay, with that out of the way, let's get started.
So here's our game plan for today. We'll start with what I call the great profitability pivot. Then we'll look inside the Uber machine itself. After that, we'll get into the secret sauce, the unstoppable flywheel. We'll follow the money, talk about whether this business is a natural oligopoly, and then wrap it all up with two big questions for the future.
Okay, first up, the great profitability pivot. This is really the core story of Uber's biggest transformation, going from a company that was famous for burning cash to one that's now all about turning a profit. To really get this pivot, you have to look back at their history. For the first decade, it was just growth, growth, growth. I mean, they were expanding like crazy, lighting billions of dollars on fire, all in the name of one thing, building a massive network. Get the drivers, get the riders, that was the entire game. And then, the pandemic hit. It absolutely crushed their mobility business. Nobody was going anywhere. But it supercharged Uber Eats, and that changed everything.
And that's what leads us to where we are now. See, after all those years of spending, they'd done it. The scale was there, the global network was in place, so management could finally, flip the switch. The new game wasn't just about getting more users anymore. It was about making the business work financially. It was about achieving sustainable profits.
And if you want proof, well, here it is in one number. This is the improvement in their GAAP EBIT margin, basically a core measure of profitability. We are talking about a swing of over 1,000 basis points. To put that in perspective, that is a massive shift. It's the difference between bleeding red ink and printing black ink. It's the clear sign you can get that this new focus is actually paying off.
All right, let's move on to section 2, inside the Uber machine. Because really, you have to think of Uber as two distinct businesses operating under one roof, mobility and delivery. And you absolutely have to understand both to see the full picture.
On one hand, you have mobility. That's the one we all know, right? On-demand rides, convenient, you know the price up front, simple. But then you have delivery. And for the merchants, the restaurants, the grocery stores, the value proposition is completely different. For them, Uber is a logistics and marketing platform. It gives them instant access to a huge customer base and a delivery fleet, all without having to build any of it themselves. That's a real game changer. Now, this chart does a fantastic job of telling that story. Look at 2020. See the dark bar, mobility? It just falls off a cliff. But at the same time, look at the lighter bar, delivery. It skyrockets. It's a perfect example of how one business cushioned the blow for the other. It was a natural hedge, built right in. And now that things are back to normal, you see both engines firing, driving the whole platform forward. Okay, so that brings us to the real heart of the matter, the unstoppable flywheel. How did they build this incredible scale, and more importantly, how did they defend it? Well, the answer lies in this powerful, virtuous cycle that is the secret to their whole operation.
So let's ask the question directly. What is Uber's core competitive advantage? I mean, it's not just the app, right? Or the brand name. Those are valuable, for sure. But the real moat, it's something much deeper and much harder for anyone else to replicate.
And this is it. The flywheel, let's trace it. It all starts with having more drivers. Because when you have more drivers, what happens? Wait times go down. The service is just better. And a better service attracts more riders. Well, more riders means more trips are happening, which means drivers are busier and can earn more money. And what do higher earnings do? They attract even more drivers back to the platform. You see, it's a virtuous cycle. Each part feeds the next, and the whole thing just spins faster and faster, making the network stronger with every single turn.
And this quote really says it all. Our network becomes smarter with every trip. Think about that for a second. Every single ride, every delivery is a new piece of data. The system learns traffic patterns. It learns where demand is going to be before it even happens. It gets better at matching riders and drivers. This isn't just a transportation network. It's a learning machine that gets more efficient the bigger it gets.
Okay, we've seen how the machine works. Now let's look at the financials. Section 4, following the money.
How do they actually monetize all this activity, and what are the big costs involved in running this thing?
So where does the money come from? Well, there are three main buckets. First, and this is the big one, is the commission fee, what they call the take rate. That's the percentage they keep from every single booking. Second, you've got advertising. Restaurants and other businesses pay to get in front of all those eyeballs in the app. And third, there's subscriptions, like Uber One. People pay a recurring fee for perks, which creates a really stable revenue stream for the company.
Now, what about costs? Well, one of the biggest line items, and it's a pretty unique one, is insurance. Because they operate at such a massive scale, Uber essentially acts as its own insurer. They hold a huge amount of restricted cash on their balance sheet specifically to cover liabilities from accidents. It's a huge cost, but by handling it themselves, they have much more control over it than if they were just paying premiums to a third party.
So you've got this flywheel spinning. You've got the money coming in. How durable is all this? How strong is the moat around this castle? That brings us to our next section, a natural oligopoly.
You have to appreciate what a tough balancing act this business is. It's a three-sided marketplace. You have to keep the price right for the rider. You have to make sure the earnings are good enough for the driver, and you have to keep a slice for the platform to actually turn a profit. Juggling those three things is incredibly difficult. And honestly, the only thing that makes it possible is enormous scale.
And this quote really nails it. Liquidity, that density of drivers and riders, is everything. Without that critical mass, the product is just worse. Your wait times are longer, your selection is poorer. This creates what you could call a natural oligopoly. The market itself just seems to favor a very small number of very large players, because scale creates a better product, which in turn attracts more scale. It's a tough cycle for any new competitor to break into.
You know, a good way to think about it is like a stock exchange. Why does everyone trade on the big exchanges? Because that's where all the other buyers and sellers are. That's where the liquidity is. And more liquidity means you get a better, more efficient price. Uber's marketplace works in a very similar way. More drivers and more riders create a more efficient market, which just pulls in even more drivers and riders. It feeds on itself.
Okay, so that brings us to the end, the road ahead. After looking at the business model, the flywheel, and the financials, it all really boils down to two big questions about the future. First question, what is the true long-term earning power of this platform? I mean, yes, they've proven they can be profitable, but what's the ceiling? As they continue to grow, as they get even smarter with their pricing and add new services, what can this platform really generate at a global scale? That's the billion-dollar question, or maybe the $100 billion question. And the second question, this one might be even bigger. How does the looming promise, or maybe the threat, of autonomous vehicles change the entire equation? Think about it. This is a business built entirely on a network of human drivers. So what happens when the cars drive themselves? Is that a massive opportunity for Uber to capture all of the economics? Or is it an existential threat that completely upends their model? Frankly, that is the great unknown, and it's what we'll all be watching for years to come.